stock market went up today. Woo! You're watching the Stock Market Review Show. My name is Michael Silva. We use technical analysis and intermarket analysis to get a good idea as to where the market might be going. Yes, we got the bounce coming from these overextended to the downside levels. Is it going to hold, or is it going to be another one of those fake outs? Let's look at the charts in today's video. All right, welcome back. So there is a lot of green on the board. Hallelujah. Dow Jones up 646 points. Wow. And also small caps, a big leader, up 2.4%. Wow. Also really good. Things are looking really good, especially with all this green. But what is not looking too good here? Well, what's not looking too good is the technology stocks are way down at the bottom of the list, whereas consumer staples, that's more defensive names, and that right there took the lead. That is not the most beneficial thing for the bulls. So that's one thing here to call out. Seeing that technology is lower, this is, we did see a positive day overall, but you don't want to just ignore the fact that tech is way down there. Now, this could flip in a second, but remember on last market brief, we talked about what the options market was pricing in, and it was pricing in for the week a large move, right? As far as an expected move goes, it was $160. Now the market's currently pricing in around a $100 move, so that can take us still up to around the all-time highs or down to around 4,500 in the S&P 500. Okay, so it can still go either way as volatility still relatively remains high. But we're going to talk about some more charts and some good developments that took place today. Let's look at consumer staples over SPY. We talked about this one on the previous brief. We're still at a rate of change on this relative strength line, XLP over SPY, below zero, but we did talk about the positive divergence, and we saw some similarities on previous positive divergences, bam, bam, where when this shoots up significantly, it doesn't mean that, they're going up on an absolute basis, but it does mean that it is outperforming the S&P 500. And you can see the positive divergence kind of playing out as it stands currently right now, which could potentially be telling us that consumer staples might be one of the players to be keeping a close eye on coming into 2022. And we're seeing some names like, for example, Albertsons or Sprouts Farmers Market. A couple of those names have been looking rather good also from an absolute basis. All right, but let's look at the S&P 500. A couple good things took place today. Well, obviously a green day, and if you pay really close attention, it put in a higher high and a higher low. What does that mean? Well, this was a low, now we have a higher low, this was a high, and that is a higher high. So that is a positive development on the S&P 500. It's a very short-term positive development, but it's nonetheless still important as we held that 100-day moving average and we got back above the 50-day moving average. We're still below the 20, and we did hold support right in that area. Histogram on the PPO is also turning up, so things are looking decent. We don't know whether or not, right, if this is going to be a temporary bounce or not, but we're going to look at some various charts. Okay, now if we have that full measured move of the expected move to the upper range, that's going to take us to right just about the all-time high. And if it comes lower, it's going to take us right back to around the 100-day moving average if we get that full measured move that the options market priced in on last Friday. Now, let's look at the 15-minute time frame on the SPY. We've been talking about this 5-day moving average being on the decline. Well, the positive development that took place today was, bam, we got above it. That is good. And guess what also? We cracked slightly this high. So what does that mean? What this means to me, we didn't close above there, but that still put in, like I said, a higher high, and that's positive. Okay, then we have a lower low. So even if this comes down and says come back to the 453, yikes, comes back down to the 453 and then bounces from that level, at least that's starting to build up positive movement for the bulls, meaning a higher low and a higher high. That's how these trends change. Now, one thing to call out, obviously, the PMO, it's looking like a bearish crossover, so perhaps we pull back a little bit. That's totally fine. But if we start taking out that 449, that is not fine, at least for the bulls. Okay, so it's still within this range of chop. As you can see, we have a high, lower high, lower high, lower high, lower high, lower high, right? But like I said, in the very short term, we did crack that one. So that is a good sign. And then we have obviously lower lows right there also developing. So from a positive note, we have that bullish momentum. bullish positive divergence on the PMO, bullish divergence on the RSI, and now we're starting to see that kind of rip up higher. So we got that bounce. Yes. The NIAID advanced decline line was showing a positive divergence. We talked about that on the weekly recap, and we got that bounce. So that is positive, and it's still looking somewhat good as it stands right now. Okay, the positive divergence is playing out in the NIMO, which we called out last week, also good. And then the volatility index, remember we talked about this. It comes like when it doesn't stay too long at these higher readings, and this is a pretty darn high reading. Doesn't mean that it can't turn back up, but we did crack down through this rising wedge that we called out, and volatility subsided slightly. Still remains relatively high up in these 20s, but remember, this could sink and come to fill this gap, and this would produce even more of a larger bounce here in the S&P 500, most likely right here. So that would make sense if volatility continues to subside to see this potentially start moving up more. So that is a good positive development. Another positive development taking place is, well, the percent of stocks above the 50-day moving average have upticked. The percent of stocks above the 200-day moving average has upticked. Okay, it's still relatively low, but we are seeing a bounce right there, so that is a good development. It was coming off of very overextended readings to the downside. Okay, and we typically produce bounces, as we previously stated in other videos. All right, if we continue to move on, the BPSPX chart, the RSI is curling back up. It's still in that oversold territory, so that can still leave us more room for a potential bounce. What I would like to see is this potentially come up, and then maybe even this to come back down to make a lower low, but this comes back down to put in a higher low. That would create a positive divergence, and that would give us a little bit more firepower potentially to feel a little bit more confident. If that positive divergence plays out, we can potentially see the market really start to rip. And now, if we take a look at small caps, right, they were up 2% on the day, the IWM. One thing to call out, right, so it was a positive day. And the positive thing that most people might overlook is that it did put in a higher high from the previous day and a higher low. So that is a good early development. Now, that can be changed in one single day, but so far that is looking pretty decent for the possibility for a bounce. Now, if we go to the 15-minute time frame, you can see here, yay, got back above that 5-day moving average, and it's been below it for multiple trading days. So it's been a while since we've recovered that, and you can see that high took out this high, right, 220.38 to 220.69. Okay, not by much, but still, let's call it a win, right, for the bulls. That was a takeout. So it's still, in this chart, right, putting in lower highs and lower lows. And you can see, obviously, the ranges of the days have been getting bigger down here. It's been more volatile, but we are starting to see something positive as far as a higher high goes. Now, like I said, if we even pull back down, as long as it doesn't take out this low, right, that would be a positive sign, because then the bulls would be making momentum. They would be stair-stepping up, and it's a process, right? What you don't want to see is this, shoot right up. If that's really the case, like, it's going to be even a more harder market to navigate, right? Because if it just shoots right up, right, we'll start looking at 232. That would fill this gap right in here, and that can act as a level of resistance. Now, even if it shoots back up, maybe it'll come back down, and then that'll offer up some potential opportunities. But just note, it would be nice actually to see it slowly start building like so, and then take out these levels to find maybe a period of consolidation, and then it'll align better for a better risk to reward if it does pop off. Because, for example, if it were to do what I just drew out, like something like that, it would allow you to have a stop loss here and then play a breakout of these levels. So you'd only be risking a small amount to potentially catch a move that has been bottoming. So it's just a way that I obviously look at these charts. Now, the NASDAQ 100, this one put in a higher low, but as you can see, it put in a lower high. So what does that mean? That means it's an inside trading candle. On a positive note, the 50-period moving average is continuing to hold, and that lines up with this prior resistance up in this area. So it pulled back, and now it's acting as support. Now, keep in mind, it cracked the neckline of this head and shoulder pattern, and it's typical to have price come down and then bounce to retest the neckline. And if that's the case and we start getting rejected and then crack this low, that can be the start of a 10% correction down to around that 15,000 to 15,250 level. That would be a 10% correction from the high to the low. And that's still a possibility as it stands right now, because right? As we've seen today on Monday, tech was actually it was the worst performing sector, one of the worst performing sectors. Okay, now obviously that can change, right? But that is just a possibility that one I want to outline for you. Now, if we take a look at the 15-minute time frame, you can see here, still below the 5-day moving average, still putting in lower highs, still putting in lower lows. PMO back above zero, that's positive, but it's also kind of curling itself over right now. So, and we never had the bullish positive divergence or the positive divergence on the RSI and or the PMO on this chart as it stands right now. So still, it's working itself out. We'll see what takes place here. Now, if we take a look at the NIAD, this is the advanced decline line, but we're looking at two EMAs, the 21 and the 50. You want these to obviously be pointing up, and you want them to be above zero. That is when it's most healthy and feel more confident if we do get pullbacks. But right now, it's obviously well below zero, and it's been pointing down. However, from a positive note, pay attention, they started to uptick a little bit here, and you could even see right here on the 21 EMA put in a positive divergence. So clicked right here to a low, then a higher low, and then we can see right here it put in obviously lows and then lower lows. So that is a positive development with that nice little hammer candle right at a previous area of resistance, and resistance can become support. So this does look like it has the possibility to potentially bounce. But keep in mind, if we get a bounce right back up to this neckline, that would probably show as technology being one of the top performing sectors, but it might be a top performing sector right into an area of resistance. Okay, so these are things that you need to think about moving forward to this week as volatility is still here. It hasn't really abated yet. Now let's take a look at BPNDX. Still overextended to the downside as it stands right now. We don't have that positive divergence. If this line actually came down more, but then this stayed higher than this one, that would be a nice positive divergence to keep track of. So we'll continue to monitor that, but as it stands right now, we are still overextended to the downside there in tech stocks. All right, everybody, that's really all I have for you on today's episode. Not too long at all, but just keep in mind, there's still volatility here in these markets. The positive divergences or these overextended levels are playing out right now. I've looked at various stocks that I just recently posted to the Discord group. A lot of stocks today, okay? This is important. A lot of them we saw go from red, so a gap down, to green today. And a lot of them landed right on like key moving averages, for example, the 100-day moving average. So it does seem like the market wants to produce a bounce seeing these type of candles. It doesn't mean it's guaranteed, but it does set up for good risk to rewards. And the only thing that we really have full complete control of here is what we risk, okay? So hope that helps. See you all on the next episode. Goodbye.